Okay, good afternoon, everybody. Here we are, VTP Stage 2 Online, Technical Tuesday, coaching call 195 for 9th of June 2026. I hope you're well. Hope you've had a good start to the week. Hope you're enjoying these swings in volatility, okay, but you're probably used to them by now. If you're in the room, great to have you here. Just confirming that you can hear my voice and see the slides. That would be very much appreciated. As always, you are very welcome here, but just remember you're always responsible for your own trading and investment decisions. Super, thank you. Okay, so yeah, let's have a look at that. So yeah, we've looked at the STAM plugin, what it's telling us. Let's yeah, start with a bit of dollar holler as always. Okay, let's just I'm going to just put these on stuff 4-hour charts, all right, just to reflect this this week. Okay, so we can talk about a few things going on here. Let's just bang, let's have them there. Okay, it's been an interesting couple of mornings on those dollar pairs as an intraday guy. All right, dollar index, here we go. Remember what I said last week, that the monthly chart and the dollar index, we'd had two inside bars, and it's like coiling up, getting ready to blow, and it did at the end of last week. It did blow out and up there to the big round number of 100. Which is not a massive surprise. 100 is the big number, but it's interesting. You can see that it doesn't want to get above it, does it? Doesn't want to get above it. Nobody wants the dollar getting stronger in that sense. Okay, and that could be the treasury in that. So yeah, you can have a look at that. The daily chart. Remember, I'd been saying that we had just literally been in this range, really for the last couple of weeks, hadn't we? We were sat above the 50, and the 20 was crossing the 50, but something bad would have to happen for the dollar to strengthen, and that's what happened. Is that basically the Iranians and Israelis started shooting each other again, and there was that kind of a bit of a sell-off, and so kind of all that flow into that risk off. But as you can see, it's kind of reversing a little bit off that. We've had that risk off rally, and this is where it's kind of useful. The 4-hour chart here, you can see where, Friday, okay, it just went absolutely ran, and that was also linked to the NFP job numbers being twice as strong as people had expected, okay, which means the likelihood of interest rate cuts diminishes, okay. If your economy is doing so well that you're creating twice as many jobs as you thought, okay, you can't cut your interest rate. And if you can't cut your interest rates, well, that's not good. It's not good for your stocks, which is another reason why those indexes dropped off Thursday, Friday. But then equally, it is good. It's generally good for your currency, and that's what we saw. But then actually, as you can see, that was just exacerbated by the kind of Iran stuff. And then you can see overnight, kind of Sunday into Monday, we printed that big 4-hour bearish key reversal engulfing candle, and we've just been working our way down for that. That's the kind of risk on relief rally. All right, that's what we're seeing there. Let's just go down a little bit so you can get an idea. So yeah, so that's what we were just kind of seeing, and even this morning you can see it's kind of followed it through there. Okay, 30-minute chart as normal. Just this was. Yes, this is a 30-minute chart. This is kind of stage 3 stuff, but we Pac-Maned out, put in a bearish engulfing, okay, key reversal, 30-minute, and just dropped, okay, and then it worked its way back and just dropped again. All right, so that's it. We're at that big 100 number, and somebody clearly wants dollar weakening. All right, so that's what that's what you can see there, can't you? That's what's happening there. Boom. So that's the dollar with that. You can see there, okay. And then you're looking at, well, what's going on there at the moment. As I said, we've had that kind of relief rally. So you've seen that relief rally, in cable, all right. Yeah, you saw it in Canadian dollar. You've seen it in kind of Aussie dollar, but also let's have a look at Kiwi dollar, okay. So when you're looking at STAM, you're looking at strength and weakness, really. Bang. If we look at this, we had a nice trade the last week on Sharabang, kind of the farmer crossed and fell. And really what we should have been looking for is, you've got dollar strength and Kiwi weakness. And so that's what we were working our way up to. All right. And, we had this nice pullback in a clear downtrend. All right. Nice pin bar followed by an inside bar pin bar. And so, interesting, kind of late last night, it looked like we were starting to kind of roll over, but then as you can see, that relief rally just basically has taken us higher. All right, it's taking us higher there. Now what is interesting is that you've got yesterday there was no real big economic calendar news. Today there's no real big economic calendar news. Tomorrow's the first bit when we get CPI. All right, so we're getting US CPI. If that CPI number is strong, it adds to the data from Friday that basically the US economy is doing all right, it's strong. So he ain't cutting interest rates, and if he's not cutting interest rates, once again, that's good for dollar, but then that's poor for equities, okay, and the indexes. So that's what everyone will be watching and waiting to see for, okay. But yeah, that's what we've seen there. Yeah, and if I look at Kiwi dollar on the short term, as I said with the dollar index, it kind of popped its way out and then fell its way down, right? And it's just you can see it overnight. There was the Kiwi. That's that kind of relief rally. Dollar selling off, Kiwi strengthening. Didn't Pac-Man, but kind of interestingly, I see that in that 30-minute chart. That's starting to coil up, isn't it? Starting to coil up, squeeze up. Now it might just be it's because it's getting compressed in front of CPI tomorrow. Or Trump's going to say something later on today. We shall see on that.